Hi, this is Roger Conrad. I'm editor of Canadian Edge. I want to talk about two things today. One is fairly general regarding the Canadian market. The other is fairly specific regarding a recommendation, Atlantic Power. Starting out with the general, I want to call your attention to an article in our Maple Leaf Memo, which is the weekly companion to Canadian Edge, concerning currencies, and specifically the Canadian dollar. Now, if you own any of our recommended Canadian securities, not only are those securities priced in Canadian dollars, but they pay dividends in Canadian dollars, which are, of course, translated into U.S. dollars when the dividend is received. And that's a function that most brokers do fairly inexpensively. But the upshot is that by being priced in Canadian dollars, by having the dividends essentially paid in Canadian dollars, you have a currency play with these. And that means that as the Canadian dollar appreciates against the U.S. dollar, you make more money. The value of your holdings goes up, the value of your dividends goes up. It's sort of like a dividend increase. So it's a very good thing. On the other hand, when the Canadian dollar falls against the U.S. dollar, then the value of your holdings declines and the value of your dividends declines. Now, I've been fairly bullish on the Canadian dollar for some time. When we first started with the Canadian Edge earlier in this decade, the Canadian dollar was scraping around 65, 70 cents U.S. cents per Canadian dollar. Now it's been rallying and it's been actually getting fairly close to parity. We saw it actually go over parity a couple of years ago and really take returns up pretty substantially. And then, of course, when the financial crisis hit last year, the Canadian dollar came off with it. Now, what makes and then since then, of course, the Canadian dollar has gone up. Now, what's been behind that? Well, one of the big reasons, one of the big catalysts behind what goes on with the Canadian dollar is the price of oil. Canada is a major oil exporter. A lot of its exports come to the United States. A growing amount of those exports go to Asia. As the value of the price of oil goes up, the value of their exports goes up, and the value of the Canadian dollar tends to go up as well. Now, on the other side of that are the export industries that Canada has, and primarily goods and services coming into the United States. So the Canadian government is mindful of that and does not want to see a real spike in the Canadian dollar, because that would really hurt some of the businesses that, of course, in a weak economy, no one likes to see unemployment rising and so on. But generally speaking, the direction of the Canadian dollar has been up. I think it'll continue to go up. I'm bullish on oil and gas and also some of the other natural resources. So I think this will be a very good thing going forward. But you want to be cautioned, I guess, that it's going to be, because the Canadian government is mindful of these other industries, it's going to be something of a measured process. So unlike the Australian currency, which has really taken off, been off to the races recently, Canadians are going to manage their currency. So it's a positive. It's also an inflation hedge, having Canadian securities, a long-term inflation hedge, but don't expect huge spike moves. They're going to try to control those. So that's the general point. I think, again, it's a bullish thing for the trusts and securities that we own. But, again, the main thing is going to be the underlying health of these underlying businesses. And that's something we can ascertain as we look at their earnings, which will be coming out in the next few weeks. And I'll be reporting back on those as well. Now, the specific issue that we have regards Atlantic Power Corporation. It's one of our conservative holdings. Several things have attracted us to that over the past several years. One is, of course, a very high dividend backed by very, very strong investments in power. They're pretty much an investment company rather than an operating company. They have stakes in a number of power plants in the United States, and also controlling interest of the Path 15 power line in California that links Northern and Southern California. So very, very steady revenues from that. Management's basic success has been due to successfully managing its risks, be they commodity price risks, currency risks, interest rate risks, the risk of operating power plants and power assets, and they've done an exceptional job with that. Well, just recently, in the last couple of weeks, they've also made a fairly major move. Now, Atlantic Power Securities have been paying a fairly high dividend for one reason, because they are not conventional equity. They're not even conventional Canadian trusts. Rather, they're a special security called an income participating security, or an IPS. And basically that is an equity security attached to a debt security. So the dividend that you've been getting with Atlantic Power has been about 60% debt interest and about 40% equity dividend. Well, the bond portion of the IPS was scheduled to come due in 2016. Atlantic had no real 2011 concerns because they're not, again, not a trust. So when these new taxes kick in on trusts, they were not going to be affected. But where they were going to be affected was going to be in 2016 when they had to do something about the bond portion. Well, what they've decided to do, and they put it to a shareholder vote that will occur later this month, is to actually just convert the bond portion of that security into equity. They're going to hold the dividend the same, so you get the same payout if you're a U.S. investor, but rather than it being 60% debt interest, which is taxed as ordinary income, and 40% equity, which is, of course, a tax at the qualified dividend rate, preferential rate, now it's going to be 100% taxed at the preferential qualified dividend rate. So that should help a lot of people who have the security outside of IRAs. Also, by converting the debt to equity, they become more of a conventional corporation. That opens them up to institutional buying, which has not really been the case in the history of the Atlantic Power Corporation. So they're going to be able to get institutional ownership. They are planning on a New York Stock Exchange listing early next year. So again, you're going to see a lot more buying, a lot more entities able to buy this security going forward. Now, the reaction in the market's been extremely bullish. The reaction of some of our investors, some of our readers, has been somewhat confused. But I want to tell you, I think this is a very, very positive deal for us going forward. I think as an equity dividend, it's going to have tax advantages. It's going to be much more sustainable, and it's going to grow over time as this company continues to add assets to its quality cash-generating assets to its portfolio. So I would urge shareholders to go ahead and vote for this deal. If you don't own shares in this company, it yields around 11% at a price of, or up to my buy target of $10 US. So I think a pretty good bargain. And again, very much a core conservative portfolio recommendation for Canadian Edge. So that's all I have to say today. A little bit to digest, but again, please take a look at the Maple Leaf memo for more of our comments on currencies. Please take a look at the flash alert on Atlantic Power for more on this deal, more of the particulars and ins and outs of it. And I look forward to speaking to you next time.